Hi, fools. I'm Lou Whiteman. I'm joined today by Jamie Gohl, General Partner of Wave Function Ventures. Jamie spent his early part of his career at the forefront of the new space race as a lead engineer for SpaceX, working, I think, on Falcon 9 reentry and recovery. So, very cool stuff. He later transitioned from engineering to entrepreneurship, co founder of Talon Air, which is a really, really neat idea in kind of the vertical takeoff and lift space. Today, he sits on the other side of the table as a venture capitalist. Jamie, thanks for being here.
Thanks for having me, Lou. Excited to
So,
talk.
Jim, yeah, so I kind of gave the 2 second version of your bio, but your career path is kind of fascinating. An engineer, you ended up at SpaceX. How did you get there? Kind of where did you start out? And talk about how it's progressed.
Yeah, sure. Thanks. So I studied aerospace engineer at Stanford, got my undergrad and master's there. After school, I ended up at a company called Scale Composites in the Mojave Desert. For those who know space and aircraft, you'll know it really well, but a lot of people haven't heard of it. It's a small company that's the premier prototype aircraft company in the world. They designed the stuff that people know would be Spaceship One and Spaceship Two that turned into the Virgin spaceship program. When I was there, I got to be on a team when I was 24 years old. I designed about a third of an airframe that we designed, built, and flew in under 9 months, which is crazy fast. So that's what they're known for, is prototyping. I really got to cut my teeth there. It's not like going to design a latch on an airliner. In contrast, we had
Yeah.
hardware up in the air that I had fully designed when I was very young. And that really let me cut my teeth and get that responsibility. I loved that job. I was 24, 25. I was living in Mojave. Didn't love that part of it. If you've been out there, you could probably
Yeah.
understand why.
Right.
And so the only other company I wanted to go to was SpaceX. And at the time, they were not that established, but had flown some rockets, which was a big deal. And then people were starting to talk about them more. But most people still thought that it was not going to work. There's no way they could get there, and no way they could get there without blowing up more rockets or running out of money, which was definitely a risk when I joined. So I joined in 2010 and did a little bit of work on Dragon capsule and then transitioned to Falcon 9. And it was when SpaceX had gone from flying the first version of Falcon 9, which was a standard single-use rocket, like, hey, we're going to reuse this thing now. Let's develop that capability. And so I got to design the aft thermal shield. That's what sits on the bottom of the rocket that enables the reentry and landing of the rocket, and worked through that. And, I was there 5 years before we landed one. We blew a bunch up, which is standard practice, still is standard practice.
Right.
Yeah, and that was my time there, and then worked a bunch more on like F9 heavy, like major structures, the thrust structure specifically. So that was my time through SpaceX.
So I'm not an aerospace engineer, but fools, I can tell you that comparing that to, not to pick on the defense contractors, or like you say, where you get hired out of college and maybe you spend the first 3 years of your career working on just one screw and never knowing if that screw actually gets used versus just jumping off the deep end. I guess that's how you end up a venture capitalist. Later in life, just like, but that's a really neat way to, as you say, cut your teeth early. Uh, it's Elon. It's SpaceX. What was it like working with Elon? There's just I can only imagine, just especially being young, early in the career, maybe good, maybe bad, or kind of, but it had to be really formative to
It
who you are
was,
now.
yeah, it was definitely formative. I would say it was 95% good for me.
Okay.
Uh, the bad, you probably heard some about it. It's a pressure cooker, but the people that succeed in that environment absolutely love it. Like it's like you're having your cake and eat it too. You get to fly stuff to space. It's fast paced. You don't have to deal with a bunch of bureaucracy, which is super painful when you want to work on that stuff and go that fast. And yeah, it was very formative. I think it's commonly talked about, but it's the extreme responsibility environment that enables that. And so, I walked in there fairly young, but I'd flown some stuff in the air, but as a prototype level, it was very different. And you are responsible for getting something to space and making it work. Nobody's going to tell you how to do it. And it's not like a lot of people are checking your work or your analysis. You are the responsible engineer. You have to get it built and it has to work, and the buck stops with you. And even if you're getting something built, you know, a lot of places you'll make a drawing, you throw it over the wall, you never hear about it again. It's like you have to bird dog it yourself, make sure the vendors are going to make it, even though a buyer put in the purchase order. There were times we would fly out to a vendor and like sit with them until the part was done because they weren't meeting schedule or weren't meeting quality. So you don't get to just say, hey, it's not my problem anymore. Then you've got to bring it back and you might got to make sure it gets installed and tested and everything. So that honestly is what enables the pace and quality of execution there.
Yeah, the ownership of it, the
Exactly.
ownership of, yeah, it's not just I did my job, it's not my fault. But yeah, I think that has a lot of implications far beyond SpaceX and aerospace. Yeah, no, as
Totally.
investors, just kind of, yeah, a bought in team that whether you're bought in or not, you know it's your problem, so you need to get this right. Yeah, I
Yeah.
think that's a neat part of the culture. Yeah.
If you're not bought in, you're gone.
Yeah. And I don't want to fast forward too much, but how common or how rare is that? Like now you get to look at a lot of companies. Is that the exception or is that becoming the rule or kind of like and how important is that in your day-to-day job now looking at companies? How much are you looking at culture just based on
A lot.
your
It's
early
like
experiences?
it's almost it's very rare to see a company actually achieve that level, but attempting it is basically table stakes now in deep tech. And if you're not, and especially as an investor, when I look at a company, you can tell sometimes with founders, and usually it's just a couple founders at that point. They don't even have a team, so it's hard to evaluate can they bring that culture to their startup, whether they're from SpaceX or not. But it's kind of one of the things you got to check the box for this company. Like, will they try to operate like this? If not, they probably shouldn't be raising venture capital and doing it the venture way because they're going to be too slow. They're going to run out of money. It's going to take too long. So it's definitely something we look really hard at.
Hmm. Hmm. So you're at SpaceX, you're doing well. You ended up. Why the transition? Well, I guess you want entrepreneurship first, and with talent, and then into venture capital. What was the draw there? What was kind of what pulled you in that direction?
Yeah, I wanted to do my own thing. That was the drive. So I left in 2016 and was a co-founder of a company based in Denver that's still around that does space deployable technology. So it's fold out antennas essentially is at a simple level for high performance communications and radar. And so I did that for 3 years. I was still in LA. They're based in Denver. It was going pretty well. It's over 100 people now. They've flown, dozens of antennas on other companies' satellites. They're very high performance. They're kind of the industry gold standard now. Um, but what I, really wanted to do something different at that point, and that's when I started Talon with a friend from SpaceX who I stayed in close touch with in 2019. And we did that for 4 years. It was electric vertical takeoff and landing aircraft system with some pretty unique aspects to it. And we
Yeah.
went through Y Combinator, built out a team of about 20 people, raised some money, and got a number of Air Force contracts. So we're actually delivering hardware to the Air Force. And then we got acquired in 2023 by a company in Los Angeles called Ampere, who does hybrid electric aircraft propulsion development.
Hmm. Yeah, yeah. Talent is neat. Just kind of so much of the cargo is so hard because with electric, the battery weight and all of that. So Talent has got a pretty neat solution to that. I mean, we don't have to pause on it too long because I know you moved on. But yeah, it's kind of and it sort of borrows from the SpaceX idea of using stages to get up, which I thought was kind of
Exactly.
a yeah, yeah. So into venture capital, did you just decide you'd rather kind of shepherd others than be involved again, or kind of how did that
Yeah,
happen? Because
it was a slow evolution for me. I started angel investing in 2014 at a small scale. My first investment was Boom Supersonic. You might be able to make out some of the airplane models behind me. Um, I was actually the first person that Blake, the founder, talked to in aerospace. So he asked a friend of his from the Groupon world, "Who do you know in aerospace?" He's like, "I played hockey with this guy at Stanford. He's at SpaceX." And Blake flew his airplane down uh, to Hawthorne, and I met with him there. We walked through the idea, and his question to me was basically, "Is this a dumb idea?" And the answer for me was like, from a technical perspective, no, absolutely not. From a capital perspective and timeline perspective, like maybe you got to go figure that out. And he tried to recruit me, but I was happy at SpaceX at the time, and we've stayed in touch ever since. And I've invested more in the company. And he was an advisor to Talon. He's an advisor to my fund. But I did some more along the way. Other companies that I'm in are Varda Space and K2 Space, and enjoyed that. After I went through Y Combinator, I joined a fund called Pioneer Fund. It's all Y Combinator founders investing in Y Combinator companies. And so it's a whole large group of people. They leverage expertises in different areas to make investment decisions. So I sat on all the hardware investment committees for them. I enjoyed that part. And I had done some advising along the way to other companies when I was running my own company that were more nascent companies. Anyway, I enjoyed all of those things. And to me, venture capital was folding all of that into one. So investing at a larger scale, helping out these companies. I'd won government contracts. I've been through all the hard parts of early stage entrepreneurship. So I can actually sit down with the founder and say, here's what I think you're missing. Here's the hard part. Or if somebody really wants to just come to me and say, hey, this is really hard. I'm like, I know. We can talk about it. So that's how I got into it and started the fund about 1.5 years ago.
Yeah. Yeah. That's a great thing about early stage too, is it is hands-on. It isn't just here's a check, we'll check back in 6 months. So you kind of can scratch, I guess, both itches at the same time. But so Wave Function Ventures, you're out there. I know you've done a bunch of, it's not just aerospace, it's there's a nuclear energy investment, I think, robotics and some aerospace, but kind of tell us about Wave Function, like what you're out there, what are you searching for, and what are you finding?
Yeah, so the sectors I target, it's all hardware based. So I don't touch even software for hardware. It's aerospace, defense, energy, robotics, infrastructure, industrials. Reindustrialization is a common term now. Some people call it American dynamism. But it's those sectors, it's hardware based. It's an early stage fund, true early stage, like pre-seed mostly. So first tranche of money in. Some seed, which is the next tranche. I've invested across those sectors at this point. I've done about a dozen investments in the last 1.5 years. Really
do you have a goal for a number? I mean, I know that there's only so big of a pot of money, but how many can you handle at one time, or kind of to keep the hands on?
Yeah, the portfolio size I'm targeting is around 25 companies, which is like slightly more concentrated than some VC, but not super concentrated. There are folks that are more concentrated.
Mm-hmm. I want to dig down because you mentioned hardware versus software, and for the last decade plus or so much of venture investing and so much of just tech hype has been around software and the internet, right? And the whole idea, because it's a scale thing, it takes a lot of money to write the code for Facebook, but once you do, you can distribute it almost 1 trillion times versus, just to pick on Elon Musk, the Model X or the Model Y, it takes a lot of money to build it, but then, to design it, but also to build it. So it's really been a software is going to eat the world environment. Now you're coming in here saying, no, it's hardware. And I want to really dive into that because I think, first of all, tell me if I'm reading you wrong here, but if not, why? What do you see that kind of goes against that conventional wisdom?
Yeah, it's a confluence of events. You were totally right. It's been a decade or two of software, very few hardware investors. What we've seen change over time especially as capital sizing has increased in the venture world, is in software. So this dichotomy is actually a myth. And so what's happened is in software, you can fund a small team that can develop a product, but because it's become so common and so well capitalized, where it gets really expensive is not the distribution of I have to send a piece of code, but the distribution on the marketing side and everything else you have to do there. So you've seen a lot of software companies, they get spun up and they've got competitors. It's really easy to reproduce. And to win, the venture capitalists have to keep firing the money cannon over and over. And it becomes a race to scale. And we've seen that play out a lot, Uber is a little bit of a different example, but like you're subsidizing essentially
Right.
customers for years until finally they're public, and all of a sudden like, oh, we've got to like actually raise the prices and do this right. But they spent billions of dollars to get there, so it's not like somebody funded them for 10 million bucks and you sat back and never had to put more money in. And that kind of has played out across SaaS, etc. What we've seen in hardware is the change it's a mindset shift. So it does require more capital upfront no matter what. Like if you have to spend $1 million on the prototype, and then every unit, like for your example for Tesla, every unit costs you a significant amount to produce, it does take more capital, but you don't have as much on the race to scale and competition side. And once you've hit some level of production, a lot of that funding actually comes from different sources. That's not equity. So it can be, asset-based lending, debt equity, venture debt, etc. And so it's more of a steady scaling that doesn't require as much dilution, and your returns are super durable. So once you're established, like it's harder to get there. It's because hardware is harder. And so you have a built-in moat. And so there's been some interesting analyses on like top 10 hardware outcomes and software outcomes, and you start comparing capital required versus outcome size, and they line up. They're the same.
Interesting. Yeah.
It just, they have different curves to get there. So that's been one big thing. The other big thing is like, honestly, SpaceX broke that narrative, but it also did a bunch of other things, and it sucked talent back into hardware. When I went through Stanford, everybody was doing computer science. Everybody wanted to do a software startup. I went to school with the Instagram founder, with the Clubhouse founder, and some other folks. Us folks over in aerospace and ME, mechanical engineering, were kind of the oddballs at that point. But when I was leaving SpaceX, SpaceX was the #1 desired employer in the country for any engineer, whether it's computer science or other. And so everybody, it brought a bunch of talent back in. That helped a lot. That started a flywheel. And then you have folks like myself leaving SpaceX, starting companies, and that went from just a few of us to many now. There's hundreds of SpaceX founded companies now. And the other thing has been government capital has changed significantly. It happened to me when I was at Talon. It was very difficult to get an SBIR that wasn't, which is a government loan from
Right.
the DoD. There wasn't a very specific niche requirement that they said, like, we need this sensor to do X, Y, Z. Somebody would be like, oh, I can build that for you. They actually open the aperture on that to, we'll take any good ideas in, and if we like them, we'll fund them to start. And then it used to be you get $1 or $2 million, and then you got to go get a program of record, which is almost impossible. They added all this intermediate funding that's tens of millions of dollars, if not hundreds. And so all of a sudden you could bridge that valley of death in hardware, doing something big, not just a sensor. So like those are a bunch of the confluence of events that happen where hardware has become easier to do. The other one is venture capital, like more capital poured in there. And all of a sudden you started getting bigger winners. And so that narrative's kind of been flipped on its head. And in my opinion, now is the time to be here. There's kind of really two sectors. It's hardware and AI, which are actually tightly interwoven. There's been a lot of noise these days about SaaS is dead,
Right.
which has been entertaining to watch. Who knows what's going to happen there? And I personally wouldn't want to invest in the AI space. It's like really hard for me to assess who's going to win there, unless you're one of the knighted few that comes out with $1 billion initial funding round. But I think hardware is going to be the next decade or two of the biggest, most durable winners that will be around a long time and be big outcomes.
It also feels like a lot of the hardware, it's solving the hard problems, which to your point about that attracts capital. Like I know at least one of your startups is in nuclear energy. It's an idea to try and, like, I guess, make energy more safer and use the properties of the Earth to your advantage with gravity. If they get it right, there's a clear path for probably a lot of different sources of funding there, things like that, because this is a big problem that's universal to so many different sectors, which again, just kind of, as you say, adds to the sources of funding down the line, I would assume.
Yeah, absolutely. DOE is pouring a ton of money into that now. They just announced more this week.
Yeah.
Significant amount for nuclear, and then energy in general. Again, this is just another confluence. And, a lot of it, like if you take a step back, has been geopolitical. Like we spent a lot of decades focused on, what we call the, higher value add services and offshoring and all the other capabilities. And, what we've realized is when you do that, you're gutting the foundation of your economy. And there's the reason we're reshoring it. It's a lot of it's a near peer competition with China, but you're positioning yourself to not be vulnerable if somebody wants to turn off the spigot of it, you name it. It could be chips, could be raw materials, could be rare earth elements. We've kind of lost a lot of that capability on the manufacturing side too, and people see that now and realize that, and so that's another big source of capital from the government, shoring up those industries.
Mm-hmm. I'm thinking sort of broad picture is like kind of how to think of the world as an investor going from here. And you mentioned AI and hardware. It feels like, and maybe this I haven't thought this through enough, so please tell me if I'm wrong. But like the hot take is why it's harder for AI to eat hardware too, as far as like defensible. AI is building software now. AI is a long way from building SMR reactors or, like without, I mean, it seems like that, yeah, there's more of an opportunity to use AI to make your processes better versus seeing AI destroy your market opportunity, which is kind of the risk right now in so many of these software companies. Fair, or am I not thinking it through?
Totally fair. Yes. And not all of my portfolio companies, but at least some of them are heavily leveraging AI, as you mentioned, to make the processes better. Like, nuclear is a good example. The documentation required and safety analysis is onerous. It's a huge lift. AI has made that much easier for the people using it in the right way. And so what that does is just cut out time and cost. On the actual hardware design side, we're not there yet. Like it's not good. I've seen some stuff. It's not that impressive. I think we'll get there eventually, but it's more about cutting out process for the rest of the company and just making things cheaper and faster.
Mm-hmm. So I want to take you back to your roots. I know you're still involved in aerospace. In fact, I think I didn't realize Airship, I think, is one of your investments, right?
Airship Industries.
Yeah, this is one of my favorite kind of startups because it's taking such an old technology and modernizing it. I'm not doing it justice, fools, but it's basically a blimp company or a modern tape.
Yeah. They don't like the term blimp, but yes.
I get it. But no, it's just I love these things when it's actually take an idea that's out there but I want to talk about aerospace and space. And again, we are mostly equity investors, and it has been a really, really good run for the new space economy stocks. And for good reason. I mean, I love the Morgan Stanley number, what, $1 trillion economy by 2040. There's even some numbers now that have higher numbers in a shorter amount of time. There's a lot of lofty expectations built in right now, but there's a lot of potential. Your former employer is that there, at least people are talking about a $1.5 trillion IPO, which is back in my day, that was a lot of money, right? But I'm curious from your perspective as someone who's both still in the business, but not really directly dealing with these. And I won't ask you if like, is X or Y or Z overvalued right now? We won't do that. But how should investors think of the new space economy right now? Is this a bubble that's bound to burst? Is this justified? It's probably somewhere in between, but kind of like, what are your thoughts as you see these stocks go up 200% in a year in the last year or so?
I think it's both. It is a bit of a bubble. People see opportunity and it's new and pour more capital into it. I do think a bunch of stuff is overvalued. I think in the long run, the industry itself is probably undervalued, but I'm talking like 10 years plus. I think, there's what you can look at is like, how do they actually make money? And, we've seen, in my opinion, we're oversaturated on Earth observation, for example. That was to me, a play that was too much hey, if I generate this data, I'll make a ton of money off of it. And we've seen some winners, but I don't think they've been as big as expected. The canonical example from probably almost 10 years ago was, hey, Walmart wants to look at their parking lots every single day and analyze customer traffic. Right. And what it turns out is Walmart wants to look at their parking lot 3 times a year or whatever. Fire hazard is a good example, or water levels. And like people want that data, but they don't want it every day, and they're not willing to pay an absurd amount of money for it. And a lot of it was insurance based, and that's a tough sell. Like, hey, I'll save you XYZ from disasters, but like it's hard to price that in. And maybe we're not there yet. So I think there's overvalue there. Where I like to play, I've only done 2 space investments so far out of my portfolio. And where I like to play is stuff that's the next step, but not the next 2, 3, 4 steps. So I love the folks that I used to work with that are doing, lunar landers and lunar mining. That is a government-funded play that may or may not be a market in 10 years, right? So I don't invest in that because there's just too much uncertainty and too much timeline and too much, which creates too much dilution for an early stage investor. So for me, it's the next step. Like, I don't want to do Earth observation, but if you look at Golden Dome or other similar things, there's this whole new set of space capabilities coming online that has not been established. So that's the next step. As one example of what's coming. That's where I like to play rather than trying to do what's been done and is overcrowded, but not something that's too far out.
How do you feel about, because I feel like, and again, it's hard to, really put these companies in buckets to some extent, but there are some like big idea companies, and there's some of the more that like look more like the picks and shovel companies, or like, like this. So we have these huge ideas, huge goals, and then these kind of people in the background, we're trying to build the solar panels or the whatever you're going to need, the right composites, which might be in the news this week. Just about composites can be very hard to deal with. Is there an advantage to one or the other, or is it just everything? As a company by company, or do you have like is there themes like that you can look at?
I think the picks and shovels is hard to play personally. It's the scale compared to terrestrial is not there, right? Like okay, you have a 10,000 constellation or 10,000 satellite constellation that needs solar panels, and that sounds big. And then it's probably about as much solar panels as like one serious terrestrial installation. Granted, the price will probably be higher, although SpaceX kind of paved the way of let's just use terrestrial stuff and let it break, and who cares? We'll just put so much more up there because our launch costs have gone down so much. So I think it's hard to play the picks and shovels. And the other reason is that it's rare for one of those companies to establish market dominance that's not unassailable. And then it becomes a commodity and a race to the bottom over time. So I tend to focus on things that are, whether it's like a platform or vertically integrated in some way, where you tend to capture more of the value rather than the components.
Mm-hmm. It's not on your level because you are very early stage, but one of the things that we've seen because of the excitement and because of some of this coming off of the SPAC boom, there are a lot of pretty early stage companies that are publicly traded that, that it used to be people like you got to evaluate these companies. Now it's people like me as equity investors. I feel is there lessons like, or is there advice for equity investors kind of from your world as we look at these kind of pre-revenue companies? I always like to talk about like, it's one thing. A lot of these are science projects. At first they have to see if the science project works. And then what you said, can they make money off that science project, even if it works? Is that a good filter, or kind of what from kind of, because I feel like some of these space stocks right now are basically early stage investments. So I feel like we could learn from you in terms of how to evaluate.
Yeah, that's wild. Yeah, and maybe I could take one step back from what I just said around the commodity thing. Like if there's a small cap stock that's trading in the, like, I don't know, 100 or $200 million market cap range, like maybe that's a good play. Because if you're looking for, whatever, a 2, 3, 4x over 5 years, like that's probably doable, and something like that if they have the right product. Um, the reason I said that for myself is like the way the venture math works. Like I need $1 billion plus outcome, and so it's harder to underwrite that for something like that. But if there are folks who went public early for some reason, but then they're small, maybe it's a good play. But I think you're asking more about the headier SPACs would be my guess.
Well,
Um,
yeah. I mean, that's all clear in
yeah,
hindsight, right?
yeah. So those I don't. Those are hard. It's a story until its fundamentals, right? And that's what I invest in. But the fundamentals have to be there. Like I super harp on what the industry calls techno-economics, which is like, how much can you build it for? What assumptions are you missing here? And how much will people pay for it?
Mm-hmm.
And there's been good ideas out there, but when you run that math and run it out 5 or 10 years, you're like, that's awesome, but it's going to cost you like 5x more than doing it on the ground, and you can't charge a premium. So, and everything on the ground is getting better. So it's like it's hard to underwrite that. And I think you can look at some of these companies that have SPACed early and kind of run that math for them to assess. But it is and hardware. One thing I harp on with my founders is hardware is a story until you're selling product, and because you at best case you're probably not selling product for 3, 4, 5 years. You got to be really good at the story, but there has to be the fundamentals underneath the story that back it up rather than just being a good story.
Yeah. Yeah. At some point, the P&L statement's going to matter. And
Exactly.
yeah. Yeah. How does that turn out? All right. So you're in a lot of different areas. Hardware. I'm just curious. You kind of said, so maybe not the imaging companies or not that, but yeah, but autonomous, robotics, space, defense tech, which is kind of space, but kind of separate too. Energy, whether it's SMRs or fusion, like what is the most promising in your mind, or is that just a terrible question and it's good companies everywhere, or kind of like what will our focus like if we talk again in 5 years or so, like what will have changed for the better, and I'm also going to ask you the other side of that. What are you worried about from here? So go ahead and think about that too. But first, the upside. Like, what are the most
Yeah,
promising areas here?
I'm excited about all those sectors. I'm spending a little bit more time and energy these days. I have 4 energy companies in my portfolio. Um, and it's obviously a super hot topic right now. And the reason it's a hotter topic than it maybe should be is the AI data center boom. Um, Even if you eliminate that, the grid growth from just our economy and like lack of building for the last 40 years or whatever it is, uh, we can't meet the demand even if you eliminate the data center boom. So there's a very strong pull there to supply better energy. And then the piece that people often miss is the distribution is not there. So the grid is, it's junk basically at this point. We're kind of hanging on by a thread. So I've got a company working in grid modernization and looked at some others, and a company that's working to bypass the grid, basically supply on-site power, specifically for rapid stand-up of things like factories or commercial like distribution centers, and maybe data centers, but maybe not. So I think that is a place I've been spending a lot of time on. Very hot sector. To your question about concern is like, is there a bubble there? Like the P&L of the AI companies is not good. Um, and that again is the story of, yeah, but it will get there. But when you're pouring, hundreds of billions of dollars into it, at some point that music might stop. And that would hurt the early stage energy companies because a lot of their momentum is based on that story, even though the fundamentals underlying them is actually better. So like that concerns me for sure. Again, because these early stage companies, a lot of it's story based, and if their story gets crushed, even though the right things are there underneath it, it can be a tough journey to get through that.
Yeah, no, that's such a great point because yeah, so much of the focus on AI, whether or not that's the reality. But yeah, and how big? Like, kind of for you, what do you? You've done a lot of different jobs in a short amount of time. You're doing this now. Like, how? Do you want to move up the value chain with these companies? Do you want to do slowly bigger funds? Are you like, is this early stage investing, or kind of where is? I guess whether it's the sweet spot in the market you see, or just a sweet spot for Jamie Gold, what do you want to be doing in like 5 years?
No, that's a great question. So, yes, I would like to scale my funds, but stay where I am. I think my edge is the early stage. I've been in the founder's seat. I can help them. I know how to evaluate these things. And a big part of my edge is sourcing. Like my networks from being a founder, from being at Stanford, from being at SpaceX are hard to match. And a lot of VC is just sourcing. You get to see the right things and then being able to access those deals. Like I consistently hear from founders that they would rather have me on their cap table than somebody who went through business school. They want that for later stage stuff when they can actually help them like run the business and the line items. So I'd like to scale myself but stay here in the same area. I do think more and more though about downstream capital for my companies and how I can help them there. Probably not through a vehicle of my own, but through the right relationships. And the capital stack that we briefly talked about at the beginning of the call is filling out even more so now. I don't know if you saw Palmer Luckey's new bank,
Yeah.
Erebor. Like that's a good example of like, hey, these hardware companies are doing really well, but people still don't know how to underwrite them and give them lending. So we're going to step in here at scale and do that. That's another option. So building relationships like that. You saw I think it was JP Morgan announced like $1.5 trillion to support reindustrialization. So helping out my companies with that, but without, having my own vehicle.
Mm-hmm. And the last question, again, this relates to kind of just how early stage some of this is for us equity investors. I think we can learn a lot from the people in your world. And I'm always looking for like the blind spots or the vulnerabilities. Like when you evaluate companies, what is the biggest single assumption that they get wrong? Or what is the thing you see that if like maybe the ones you've passed on, like what are they missing? And maybe that could translate to what do we miss sometimes when we get all excited about these great ideas that aren't companies? Is there like a common, like, is there a warning sign that you can give us for kind of,
yeah, at this stage, like there are a few. One of them is superior tech wins. And sorry, it just doesn't, right? There's been a lot of examples of people who toil away quietly on, somebody rediscovers it 20 years later and it's far superior technology. So this comes back to the storytelling thing. And can a founder get good at that if they're not inherently good at it and play that game? Like you're out there, I'll tell you, every CEO, I tell you, you're the chief storyteller. You're not the CEO. Like you have to tell it to your hires. You have to tell it to your investors. You have to tell it to your customers. And then once you have your team, you got to, keep telling it to your team. That's almost their entire job. Hiring is brutal in this sector. Talent is still relatively scarce, and there's enough well-funded companies out there competing for all the same people. So yeah, I think that's an incredibly important aspect. And so if there's a disconnect between like my tech is the best, it's going to win, and you're like, but nobody cares if you don't tell the story.
I'm still bitter about my Betamax because I really liked that Betamax way back when. But yeah, no, that was a long time ago. All right, Jamie, thank you. He's Jamie Gold. He's founding partner, I guess, of Wave Function Ventures, an early stage hardware focused venture fund with just an amazing career in a short amount of time. And we really appreciate you coming on and kind of sharing your insights and experience. This has been fun.
Thanks for having me, Lou.
Thanks, Jim.